Rupee, that's in headline, that's making headlines because rupee has gone down to record low, and it has crossed $1 has crossed a price of 90 rupees. So let's understand a weak rupee. So when people say that rupee is weak, it simply means $1 American now costs more rupees. Now, for example, if the exchange rate moves from 85 per dollar to beyond 90, India must spend more rupees to buy the same goods priced in dollars. This matters because India imports essential items like oil, electronic machinery, medicine. So a weaker rupee increases our import bill, impacts inflation, and eventually touches our investment. So let's talk about the negative impacts on your investments. So first, inflation rises and reduces your real returns. Now, with imports becoming costlier, general price levels increase. Suppose your fixed deposit earns 6%. If inflation climbs to 7%, your real return becomes -1%. So even though your money grows on paper, its buying power fails. Second, market volatility due to FII outflows. Foreign investors often react to a weak rupee by moving money out of India, a process called capital flight. Example, if foreign institutional sells 7,000 crore worth of stocks in a week, the market can dip to 2 to 4% quickly. Now, this doesn't mean the economy is collapsing, but short-term market swings can create fear among retail investors. Therefore, one needs to be very cautious of these kind of movements. So the other impact is overseas education and travel becomes costlier. If you're sending your child for a foreign education, a US college charging almost 30,000 per dollar a year might be costing almost around 22 lakhs at 75 rupees per dollar. But now, since the cost has gone beyond 90 rupees, so the same fees can, cost you more than 30 lakhs, which is almost a rise of 5 to 7 lakhs in your budget. Family trips abroad, buying dollars, even software subscriptions, everything becomes more expensive. Now, the pressure on the debt investment, a weaker rupee often leads to higher government borrowing costs. Rising yields mean existing bond prices fall. So short-term debt mutual funds may see temporary dips. But let's also talk about the positive impacts on investments. Now, export-oriented companies benefit. IT companies, TCS, Infosys, pharma companies, exporting drugs and specialty chemical firms all earn in dollars. So imagine a company bringing in almost $10 million annually at 75 rupees per dollar. And now, since it's weakened beyond 90, there obviously sales would increase. Now, this boosts profit and supports stock prices also of these sectors. Let's talk about NRIs. They gain more from remittances. For Indian working abroad, a weaker rupee means every dollar remitted gives more rupee at home. Sending back $1,000 earlier gave you 75,000. Now, you will really get an extra money with that effort. So even NRE deposit becomes more attractive as NRIs convert dollar to rupee at a better rate. Let's talk about gold, because gold shines in uncertain times. We all know it's a safe haven asset. Now, gold internationally priced in dollars, so when the rupee weakens, gold automatically becomes costlier in India. For example, even if global gold prices stay flat, a 10% rupee depreciation can push local gold prices up by 6 to 10%. Now, this is why gold ETFs, physical gold actually act as a hedge against currents. With that, it's a wrap on the Money Show, but all you have to do is just send across your queries in case you need our expert advice or recommendation or any help in formulating your financial portfolio. The WhatsApp number is flashing on the screen, as well as the email ID where you can send across your questions. Thank you so much for watching. Goodbye.